In today's video, I'm going to share with you the 5 names that I'm buying today as the market approaches all-time highs. We don't want to be buying things that are too expensive or that can hurt us on the way down if the market does decide to correct. So I'm trying to add to things safely today where I can to increase income safely where I can. So we earn over $100,000 per year in dividends at this channel. My performance and value also shows that I'm up 45% for the year. 45%. Yesterday we were down 1,000 in the Altria video, and we ended up being up 3,500 by the end of the day. So that's why my performance increased even further. The Dow's up 6, the S&P is up 18, and the Nasdaq's up 34. So we're beating all the indexes on a year-to-date basis, and today on a daily basis we're up 0.33%, which is beating the Dow. The Dow's up 0.17%, the Nasdaq's up 1%, and the S&P is up, as you can see, about 0.58. So we're pretty close to all the indexes, which is the main purpose of this channel, is to invest in dividend paying names that are tied to the indexes. If you need help with my investment strategies, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides on, let's say, how to play Cornerstone or how to use margin to live financially free out of your brokerage account, you get access to my Discord server where I alert you of the Cornerstone rights offering. We're here at Discord. We're over 100 members strong, as you can see. This is just the Cornerstone Rights Offering channel. We have all kinds of channels. We have daily portfolio recap, all of my portfolio trades that I'm making a day. I show the recap here on the channel. We have a Canadian channel, Drip for Cornerstone. We have all things margin related, options channel, Bitcoin channel, life hacks, yield max strategies. So protecting your portfolio, lesser known dividend plays, and the channel is only going to grow. The chat room is only going to grow with all these extra channels. And again, my most important position here is Cornerstone, CRF-CLM. So that's just, the whole thing that we're doing with this is waiting for the rights offering announcement. It's a 5-star fund on Morningstar, and it's where all my portfolio is 5-star. Here you can see it outperform the index is Cornerstone. Pays a 21% dividend, and it drips its dividend at the NAV every month. Sorry to be repetitive, guys, just sharing with you why I have Discord in the first place. So the market price is $8 for Cornerstone, and we drip here at $6.52 every month. $6.52, $6.42, 28% gain, $6.27, 31% gain. Let's say $6.33 down here, 30% gain. So this is a 21% dividend in Cornerstone, tracks the indexes, 5-star fund, drips its dividend, the 21% dividend down at the NAV every month. So that's where I'm getting most of my performance and days gains from. As you can see here, we're up about 1,600, about 1,000 almost in Cornerstone by itself. Okay, so where else do I get my performance though? Well, all these other names are important as well. So I'm going to share with you the 5 names I'm buying today and why I'm buying them, okay? So is there anything I left out about my e-guides? No, when you buy my e-guides, you get Discord access and you get my phone number to call me anytime at. So I'll walk you through your portfolio and help you set it up just like mine. So moving on to the point of the video here. All right, going down to clip, because this is what I did, okay? This is when the market's at the highs, I'm trying to find ways to add, as I told you, without taking much risk. And this is how I do it, okay? First, when the portfolio opens up for me and the market opens, I always look at the percentage change column first. This is how I go about my business. First, I sort all of my plays from highest to lowest, so I know where most of my money is. I have 500,000 in Cornerstone here, and then everything else goes down in descending amounts. So that's how I can see where all the attention is. I always scroll up to the top of the portfolio, and this is where all the action is, because this is where most of my money is. I weight it from greatest to smallest here on this value column, okay? So as I'm going down today, I see, okay, clip is down a little bit, and I keep going. I see Fangu's up 5, and that's been working out for us. That's our yield max play to get more long exposure on yield max. I see that's up 5. I see little things here. I'm trying to see what sticks out. Okay, so Fangu up 5 stuck out. Clip down a little bit stuck out. My short here, Fang D, that's what's supposed to happen. SQQ short, that's what's supposed to happen. So nothing really on a day's gain basis that's sticking out to me. So then I go to my total gains column, okay? And I just scroll down. So wherever I'm down in my cost position or fractionally up on, that's where I can add to without taking much risk in the market, I say to myself. But it can't be growth names. It has to be somewhat value names. Or if it is technology or something growth related, it has to still be cheap. So, for example, Clip meets that criteria. Today, Clip was down. I don't know. I think it was on an ex-dividend date. People have been mentioning how Clip is about to have the dividend. I don't know. I'm not paying attention. But I added to Clip. I added $1,000 to Clip because it was down today, and I'm down on my cost position 6%. So I don't mind adding to Clip. Plus, I'm keeping all these positions here at 15, so I still have another 1,000 to add to it before I'm overweight. So I added to Clip because also I think China is somewhat of a value play, even though tech has had a huge run. And so I added 1,000 to Clip to get even more dividends. I mean, it's a 50% dividend. So, I mean, I'm already getting another, off the $1,000 that I added there, another $500 per year in dividends. Thank you, Dave Rouser, for that comment. I'll respond to you in 1 second. So I added to Clip, okay? I added to Clip down today because that's in the total gains and losses column here. Total gain, I'm down in my cost position, so I added to that. That's where I can add risk without taking too much risk. So I also added to Riv because it's down on my cost position. Yes, it's up 0.26 today. You don't like to buy when things are up, but I added to Riv because the Fed raised rates yesterday, and I think this is going to be one of the last rate hikes that we see. I mean, we might see another fractional rate hike, but rates are supposed to move down in 2024 and 2025 based on the Fed funds rate. So I'm buying bonds since, they're really affected by interest rates rising, obviously. And if we're seeing the last of the interest rate hikes, then I'm going to be looking more into bonds, obviously. So I added to Riv there as one of my fixed income plays. So I added 500 to Riv. I added 1,000 to Clip. CRF I haven't added to today. I could add to CRF, but I have too much in Cornerstone, so I'm leaving that as it is. Okay, scrolling on down the line, what else do we see? OP, I'm down 10% in OP. Okay, another fixed income play. So I added 500 to that today. Yes, it's up 0.53, but it's still cheap on a long-term chart. Go check out OP. Has like a 12 or 15% dividend. I forget what it is exactly. It's been brutal in my account. It's been really bad, a really bad performer for me over the last few years. But nonetheless, I need more fixed income plays, and it has a nice yield. So I added a bit more to OP today. Scrolling on down the columns here, 24%. What is this? Fangu. Yes. So obviously, Fangu's been doing well, and I actually did add to Fangu today, but I'm not counting that into the video. I don't think that's a good risk reward play here. It's up high. It's tech has had a huge run, but I have to get long yield max exposure. We're not going to get all the exposure, all the performance out of the covered call indexes, ETFs that we want. We have to have some long exposure as well. So I get that with Fangu here, since Fangu has most of the yield max names in it. I also think Fangu names are cheap. Some of the other Fangu names, there's only 10 holdings in it. One of them is Netflix, and I still think companies like Netflix are cheap. So Fangu has some upside, and that also gives me yield max performance boosts. So scrolling on down the line, 2% down here. Is that BDJ? That's too slow of a mover for me. I'm not touching that one. I only have 5,000 in BDJ. 2%, 2.96 in OCCI. I could add to that today. 2%, I'm down in BST. So OCCI I might actually take another stab at, but that's a riskier fund, and I keep it at 5,000. So honestly, I can't add to OCCI because I would be overweight in this position. So OCCI, I'm letting that fall more before I add to that one. Scrolling down the line. Where's the biggest standout here? FCO, yes, that's a nice performer. ZTR down 2%. I could add to that. That's a 15% yield in its utilities. I could add about $300 to that just to get it up to 15 again. So it's still doubled your investment over 10 years. It's still a decent fund. It's just not one of my favorites by any means. ZTR 300 place buy. Okay. It's a utilities play. It has 50% of its portfolio is in utilities. So, and as you can see, our days gains are tapering. We're up 4,500 today. Now we're only up 1,700. I kind of feel like it's because the market's had a huge run and it's trying to top out. Okay, so where were we? Let's go catch up to where we were. ZTR, so we added to that. Okay, now we have 15 in ZTR, and we have dollar cost average down on our cost position. ZTR, okay, where else did I add to? Mo's doing well. We had a video on that yesterday. Scrolling on down, FANG-D is supposed to be down big. That's my short. SQQ is supposed to be down big. That's my short. SARK is supposed to be down big, 43%. That's my short for ARKK and OARK. Mara, I've been adding to a little bit. And is there anything else that we see here? So nothing else nothing else stands out to me. Now let's go to my complete view and show you what I added to, just in case I couldn't catch it there in the columns. because since I dollar cost averaged, the percent that I'm down in there looks smaller, so I can't tell what's sticking out anymore. So this is what I bought. Okay, I bought another 1,000 AMZ today because I still think that stock is cheap. Yes, it's up 50% from the lows, but all of tech is up huge from the lows. I still think Amazon is way off the high. So I added to AMZ today. I brought that up to 5,000. I added to Riv. I added to Clip. I bought some more op. And I added to ZTR 1, 2, 3, 4, 5. If you view all here, you'll also see that I added a little bit to Fangu this morning. I bought some Fangu. And I also bought some OXLC. But why didn't I put too much in OXLC? Because it has an 18% yield. Well, OXLC is 100% maintenance. So 100% maintenance, that takes up all my equity, and that's a killer here when you're using margin. So I use margin, as you guys know, to live financially free. I use a fraction of this number. For every $1 you put in your account, you get $4 of purchasing power. So I'm just using a fraction of this almost $1 million in purchasing power to get more income and performance out of my account. So my debt is 210,000 roughly, but my income is over 100,000. So in less than 2 years, my debt will be gone and my account will be plus 200,000, because when you pay your debt down in margin, your debt goes to zero, but your equity and account value actually grows by that amount, unlike with credit cards. When you pay off your credit card at a zero balance, it's just at a zero balance. It doesn't add equity back in your account like it does a brokerage or like it does with a house with real estate. So this income will more than pay back my debt in less than 2 years. So I'm only worried about this number, available for withdrawal, because that's how I live financially free and swipe out of my E-Trade account, buying cars, clothes, trips, food, whatever you want. Even though I'm in debt, I use this number to swipe my card out of. Okay, this is a meaningless number to me. As long as I don't sell my shares, I keep collecting dividends. So I don't care if this goes to 0 or 100,000 or 50. As long as I don't sell my shares, I keep collecting this income of 135,000, okay? And so as long as this doesn't get to 0, I'm not in a margin call. So it's all about being able to withstand margin calls. You know, if I can withstand over a 30% correction in the market, I could even do more than that, since I always keep put options on for insurance. I could withstand over a 30% correction. That's in 1 month. I could still withstand that. But over a course of a year, a 30% correction, we would be at almost a break even, because I yield 20% in my account. So if you're down 20% in Cornerstone in the market for the year, then you break even, because the dividend is 20% for Cornerstone. So I'm trying to get best of both worlds. I'm trying to get days gains here, you know, make money daily so I can increase performance, so I can increase this available withdrawal number, okay, but also get dividends to live financially free out of. And dividends qualify to banks for loans, unlike with trading. So this is my whole mission at this channel. And I have to keep low maintenance names on as a result. Cornerstone is 30% maintenance. I love that. But if you go to Oxford's maintenance down here, you look at Oxford, OXLC, where is it here? We'll go to trade. Well, actually, we'll just go to the margin tab, okay? I'll show you all the maintenance requirements for every stock that I have. So here you can see we like mostly 30% maintenance, okay? Most of the stuff here is 30% maintenance. But if we go to the requirement section, like you can hit requirement and sort your maintenance from highest to lowest. 100%, I keep my smallest amounts in 100% names. OXLC, 100% maintenance, okay? So that for every 1,000 I put in OXLC, it takes up 1,000 of this equity number here, this available withdrawal. I can't have that. I'd rather put 1,000 in Cornerstone, and then it only takes up 300 of my equity. So only $300 of this available withdrawal comes out because it's 30% maintenance. So if you scroll down to Cornerstone, you know, here in the C's, okay, where are the C's? Right here, C's, 30%. Okay, 30% maintenance. Okay, the 5% is where I boxed and hedged at the highs in Cornerstone. That's another video. It's another topic for another time. I still think it's prudent to hedge at the highs here. And if you're going to buy things, like I've been saying, buy things that are undervalued or where you're down on your cost position or slightly up on your cost position. Don't buy things that are up huge and that you're up huge in your cost position, because now you're just adding unnecessary risk into your account. So that'll do it for the video, guys. Those are the 5 names I added to. I really added to about 5 or 6 names today, but I just wanted to show you how I add. It's not really the names I added to. It's going down this column. Every day I just look at what's the biggest standout in the day's gains column, and then I switch over to the total gains column, and I look at the percentages here, and if I see anything out of line, I add to it. If I see green that's plus 16%, like right here, I don't even look at it. I don't even know what it is. I don't look at it. I don't care, because I can't touch it. It's too high above my cost basis. I'm only looking at where I can maximize here. So I'm looking here, I see down 1.79. Can I maximize? Yes, I bought some more ZTR today. And we always need utilities. Those are also good value plays and defensive plays when the market tops out, like it should be doing. Because look at the performance and value of our account. Once again, guys, up 45%. This should be alarming. Okay, 6% the Dow, SP is up 18, Nasdaq's up 34. So the market can't continue this run. Okay, these are the moves of what stocks make. Okay, stocks move 34% a year, not an index. So I'm protecting where I can. I'm hedging. I have shorts on. I've boxed my positions with Cornerstone. If you need help understanding anything that I'm doing, again, email me for my e-guides at aikentodd48@gmail.com. Thanks for watching. Talk to you soon.